Good evening, everyone, and welcome to Grace Christian Fellowship. We are in our third series of 5 of our financial literacy program. And first, let me introduce to you Miss Rose Gill. She is with Truist Bank, and she has been delivering phenomenal workshops as we are learning today how to conquer our credit. And even before we continue, we have 2 more of our series. Next Tuesday at 6 o'clock, we will be doing a series in regards to building your business for entrepreneurs.
Yes.
And then the next Tuesday, we will be doing a phenomenal workshop in regards to becoming a homeowner. And so this is an excellent program that we've been doing at Grace Christian Fellowship. And we're going to top it off with the very last Tuesday in the month of August. We have a special minister coming in who is going to talk to us in general about our finances and budgeting and credit and everything else. And so without further ado, I'd like to welcome Miss Rose Gill.
Hi, good evening, everyone. I appreciate you all joining, and I appreciate the questions that you had sent in about credit. And as we've been learning through our journey here about, it all starts with the banking basics, saving and budgeting, budgeting through a crisis. This all kind of folds into one. So each session that we do kind of adds on to the last session. So as you can see on our screen above, why are money skills important? We've been talking about that these past couple weeks. They create independence. Again, we talked about a budget, setting and reaching goals, enjoying living responsibly within your means. That's the main key that I always learned to, when I was growing up and as I've been in banking, kind of seeing, and that's where the budget comes in, people living within their means. And it's really important. Remember, we talked about needs versus wants, especially when you're looking through credit and looking at credit, that's what that all melds into that. So think about those things when you're thinking of purchasing something. Some of the questions that were submitted, we'll start with some of those. What is credit? So credit is something that a bank, everybody's given a rating. And that's how banks determine, and also not only banks, insurance companies, people that you pay rent to. There's all different kinds of people that pull your credit. There's soft pulls and then there's hard pulls. So soft pulls are like a bank will do a soft pull just to figure out, hey, if you've ever been a victim of fraud, things like that. Same thing with renters. Rental people will pull your credit just to figure out if you've ever defaulted on something. Because not only do banks report into the credit bureau, so do businesses. When you pay your cell phone bill, when all that reports into the credit, and how does that report in? It usually reports in when it's negative. So like if you don't pay your cell phone bill or you don't pay your medical expense, they send you to a collection agency and then that reports on your credit bureau. So when you do end up needing credit, or when you do end up needing to purchase something, that remains on there. So there's different things of why it's important to pay your bills on time. The one thing you need to know about credit is it can be fixed. And we've talked about this through the other sessions that I've had. You can make phone calls. You can also do disputes on your credit. I had a lady just the other day, she had a medical collection. She didn't know till I pulled her credit for a loan. And I informed her, I said, are you aware we have to, what happened to this collection? It was only a couple $100. But a bank has to be fair. We do fair lending. We have the same rules for everybody. Doesn't make a difference if you're rich, poor, whatever. We lend equally. So she had to explain what happened. Well, she didn't even know it was on her credit because she had never looked at her credit. So that's why it's really important. And I know the people here have got sheets on their desk in front of them, And what's on the sheet? It's the 3 credit reporting agencies: Equifax, Experian, and TransUnion. On this sheet, what I have here are phone numbers. Every year, everyone is entitled to a free credit report. And it's really important to get that, because that's how you can tell if something has been reported to the credit negatively or positively. You really want to look. For those of you out there that are junior or seniors, you need to be careful. So like my son's name is Jerry Jr. Well, some of the things that he reported got mixed up and reported on our credit. See, that's why it's so important to pay attention to that. This is what determines how you get loans, how you get rates, the good rates on cars or whatever. I want you to feel confident walking into a car dealership and looking within your means, looking for the type of car that's best suits for you. And you have the negotiating power because you know you have strong credit. It's really important, and it's a fact of life, and that revolves around money. We've been talking about that, and it is true. But let's make it benefit you. Let's make it be the benefit for you. So we have some of these extra here. What I did with my credit bureau, I just called each one of these, and actually the one goes into the other. You can call them and ask for them to mail you your credit report. There is also ways that you can get a free credit report online, but be careful, because sometimes when you ask for those free credit reports, it'll ask you to enroll in something. So that's why I always just call. I know I'm just going to call. I'll talk directly with the credit bureau. We've had people that didn't even realize they clicked a button and enrolled in getting a monthly charge to get their credit report or to get their credit score. So that's you have to be careful of that, because you can stop it, obviously, but you just have to be careful when you're doing things online. So this is a good way to do it. You just call the credit bureaus, the 3 of them, directly. So one of the things that we do is we look at understanding credit. How will you pay? These are some of the things that we look at. Being a bank, being anybody. If you're renting someplace, we need to make sure you can afford that. Can you afford what your cost of living? Can you afford that phone? We talk about what's your credit score. Everything you do with your credit accounts, your credit score, including your car and school loans, reports to a credit score, reports to the credit bureaus. Creditors extend credit to credit-worthy customers. When you pay your bills on time, you're proving yourself credit-worthy. Banks reward good customers with lower interest rates and higher credit lines. Employers may check your score. A bad score may result in fewer job offers. We do look to see. I mean, that's something that we do, especially if you work for a bank. We always will pull your credit to make sure. I mean, if I'm handling money for customers, don't you want your banker to be above and beyond board, that we haven't been a victim of somebody or we haven't committed fraud ourselves? So we really do that. Now, can anybody here tell me what the highest credit score that you can get? Higher. 850. 850. I have only seen, the highest credit score that I have seen in banking is 820. And so how do you get that score? Well, what it just says there, pay your bills on time. All of that reports. When you have your car payment due or you have your house payment due, everything reports into the credit bureau. You want to make sure you pay those on time. And then that's what gives you a good credit history. Because when we look, the banks are looking for all of those things. Okay, one of the things, and something new that's just came out that banks can actually look for when you're establishing credit, we can actually use rent, like showing that you pay your rent on time. I've been doing this for a long time, never used to be able to claim that. I've had customers come in and say, I don't have any credit, I don't really have a score, they ask you for alternative things that you've paid on time. So that's really important, that if you're paying cash for something, get a receipt, have a ledger, have something that you can show. You have to be able to prove. Because think, when you're purchasing something, We have to be able to prove that that person made that payment every month. So that's another way to get positive credit. Okay. Understand knowing your limit. Don't get over your head on a credit card. A credit card is a loan. Anything that's not paid back in full is assessed an interest charge. There is a predetermined credit limit with money spent that can be paid back in full or installments. So when we talk about credit limits and credit cards, and we'll go into some more details on that, you don't want to go up to your limit. You want to use it. Another thing a bank looks at, if I have a credit card with a $500 limit and I'm using that $500 limit and I'm only making that minimum payment every month, we talked about this the last time, what am I doing? You're just paying interest. That's all you're doing. You're not helping yourself at all. So we want you to see how what we're looking to see is how you use credit responsibly. So that's what's important. Yes, sir. That's okay. That's okay because please. Yes. He asked if it is it if you have a credit limit of 500, if you use the whole 500 and then you pay it off every month. And I said, yes, that's okay. That's okay as long as you're paying the balance in full. The bank looks at that and says, he's just using this to get rewards or to get, because that's what people do. I use my card to get rewards. That's really important to me because you can get a lot of free stuff. So that's being responsible. I always tell people, pay for your gas. You get 3% on our card, and then if you deposit it back into your checking account at BB&T, you get 10% on top of that. So you're rewarding yourself. So a lot of people, if you're smart and you know how to play the game, you can get some free things with that. Good question. Yes. Mm-hmm. That's if they're keeping a balance, though. She was asking about using only 30% of your credit limit. If you're making minimum payments every month, so if you're up past 30% or 50%, or you go to that 500, yeah, and then we talked about you're making the minimum payments or a little bit more. A bank does look at that, and that does negatively impact your score. Yeah, if you take it to the limit, if you're taking it over to where it's to the high side of the credit revolving credit limit, that does negatively impact. That takes your score down. Yes. Wait, but you're not maintaining a balance. You're not keeping a balance. He asked about if you're doing that thing with the $500, does that negatively impact you? As long as you're paying that off, lots of people use their credit cards every month for all of their purchases because of the safety issue. Because when you're using a debit card as opposed to a credit card, what happens? We're taking the money directly out of your checking account when you're using your debit card. So with fraud and everything like everything like that's going on, people have been using credit cards more and then paying them off every month because you're not affecting your main bill account. You're not affecting your money. That's your cash money that's in your checking account. So when you have your debit card, it's coming right out of your checking account. It's just a protection. It's a layer of protection for you because you can dispute those and you get those back quickly. And it's not going to affect your money that you live off of. Good questions. So understanding interest rates, and we talked about this. This is one of the questions that asked about an APR. What is an APR? That stands for annual percentage rate. And what that means, when a bank tells you a rate, so like I might say the interest rate is 2%, the APR or annual percentage rate is 2.5% or 2.3. It's not that, but it's so how we quote that, the annual percentage rate, it includes all the fees and everything. So when you do a loan, so like say when I do a line of credit for somebody for a home equity, their rate is 3%, but that's on the loan that they took out. So that's if they do a loan for $30,000, their rate's 3% on that $30,000. That doesn't include the fees for the appraisal, for all the pulling your credit. So the annual percentage rate includes all of those things that are in there. So it could be a little bit higher, but you're only charged interest on your loan amount. Those other things are kind of added in, and you might have a prepayment penalty or something like that. A lot of these things, percentage rate is very a technical term, and you can get into the weeds in that when you start talking about that. You want to look at your interest rate and your annual percentage rate, and just make sure that those things are all in line, that they're accurate. And we're going to kind of show you that piece in here, why you want to look at what your annual percentage rate is, because if you're paying things over a term, we're a business. We have to make our money too. So when we charge the annual percentage rate, we're making our money back off of what we're lending you money. We're letting you use our money, but you have to pay us back. And that's, we're a business. We want to make money on that money. Yes, sir. Good. He asked if your credit score or your credit report only shows if you miss payments, or does it show when you make payments on time? When we get a credit report, we see month by month. So when you'll get tick marks every time you pay everything on time. But what they do is they document how many times you've been 30, 60, and 90 days late. So you don't pay something on time and you're past 30 days late, past 30 days. So remember that. If you're within the 30 days, we don't report it to the credit bureau. Now you might be adding a little bit of interest on there. You might have to pay a little bit extra, but as long as you pay it within that 30 days, you're okay. You're not late. After that 30 days, that little check mark comes on there. And then that alerts the bank. So if we go apply for something, we may ask, why did you pay that? There was one time a 30-day late. Can I ask you why you paid that one time 30 days late? I forgot. There's all different kinds of reasons that we select from, and that we just put that reason in there. We have to document things because we're fair lenders. We're fair lenders. We have to document things. So if I ask you that question of why you were late on that, I'm asking everybody that question. Doesn't make a difference. Yes, sir. Good question. So paying early, it just counts as a positive tick mark. So paying things on time or early is okay. I pay all my bills the same time every month. I pay everything I owe. I pay at the same time because most things are due around the first of the month. So I'll turn around and I'll pay everything that very first week. I know what my bill was. Yes. So he asked if you're 60 days late or you're longer, how long does it take your credit score to go back up? Well, it depends upon what the bill it is. It depends upon what it is, because the credit bureau updates, sometimes they update faster sometimes it can take them 3 months to catch up. So if you pay something late and then a month down the road you go apply for something, you paid it, you're okay now. You're paid up, but it shows to us it's still being late, that it's not paid as agreed. So that's where it gets into a hairy space. We may ask you a question, say what happened. You just be honest with your banker. Sometimes we may ask you to write a letter. What happened? We have to be able to tell your story. So when I'm doing a loan or I'm doing anything, when I'm applying for a credit card, I have to tell your story. I'm an advocate for you. Okay, good questions. So we talk about 30 installment credit is car loans, student loans, home loans, furniture purchases. Revolving credit is department store cards, bank cards, Visa, MasterCard. Sometimes people will walk into a department store and the clerk will say, you get an extra 30% off if you apply for our card. When I see that on a credit report, it doesn't negatively impact you, but it's not anything that the bank looks for, because you can only use that card at that store. So their credit levels are a little bit more relaxed than ours are. So they'll give people a credit. They'll give people a credit card that probably should wait. So it's just because you're making purchases in their store. I encourage anyone that wants to get credit or wants to go purchase things, start off small. Go to the bank that you bank at. Get one of the bank cards that they have there. Your bank's going to help you and take care of you. So we have so like for instance, and let's say you're brand new with credit, and this is the great way to build credit and establish credit. We'll talk about that. Is by getting you might not if you walk into the bank and it's your very first credit card, we might not approve you for that right off the bat. We will do what's called a secured card. What a secured card is you put the money up front, the bank holds that money in a savings account for you. So you're earning a little bit of interest, not much. But then we give you a credit card with that limit. It lets us have a history with you. It lets us see how you use credit. So it's really important when you have those cards, you establish with the bank. You're establishing a relationship with the bank. Yeah. We're going to talk about that. We look at your income. We look at what bills you're paying every month. And that's what's called debt to income. So at BB&T, I can speak for Truist. We don't want you to be strapped. There may be times where we decline someone because they might think they can afford it, but we don't. We want to make sure you can afford it and not be uncomfortable. So if you get in a jam. So for instance, our lending guidelines in every bank is different. Our lending guidelines, we don't like you to be above 43% debt to income. We'll explain how you figure that as we go on, because we'll talk about that at the last part because it talks about loans and stuff like that. It's good questions. Yes. There, there. People like installment loans. That one's not better than the other because there's all different types of revolving credit, like lines of credit and things like that, where you use your home as equity. Um, there's all different types of loans like that. Revolving credit, to the differences, installment loans, and this is kind of up to the customer. If you're the type of person, especially if you're in a budget, you want to have a set payment so I can have my budget. Installment loans, every month I know that same payment until it's paid off. So you're given a set term, so it'll be 12 months at 5%. Your set payment is 200 and whatever dollars. So you know in your budget that's going to be your monthly payment, and that's how you stay within your budget. Now, revolving debt, as you'll see, that type of debt is a little bit different. That type of debt is we're giving you some revolving credit. We're letting you have a little bit of a line. We're going to charge you a certain amount of interest. It depends upon the type of. We have interest only. There's all different types. So it's just kind of get to know. You have to read the fine print on credit cards, on any type of revolving debt. Make sure you read the fine print of how your payments dispersed out, because like for instance on home equity, we can do an interest only home equity. You can pay the interest only. Your payment's going to be very low. Then let's say you want to make one big payment, you could put that right towards the principal and pay that principal right down. So there's different. That's why you really have to kind of, if you're thinking of something along those lines, you really need to sit down and have a discussion. That's where it's really important to have those discussions with your banker, because we'll go through and say, so what's your goal? What do you want to do? If you're wanting to build credit and you don't have any credit, secured card, way to go. That's the way to go. If you already have credit and you want something based on your budget, you might want an installment loan. So it just based on, we have the conversation because everybody's needs are different. Everybody has a different goal in the end. So advantages and disadvantages of credit offers and options. Advantages, it's convenient. Remember, we went into that department store. Immediate purchasing power, that's always nice. You like to have it at your hands. No need for cash. Bills can be consolidated, zero liability on fraud. So that's the advantages. So a lot of people, what they'll do is they'll say, someone might offer you a card and say 0 interest for 12 months. And you can roll your balances in from your other cards. Okay, well, that's good. Keep an eye out, because look for the best deal, because what they'll charge you a balance transfer fee. Okay, so really read the fine print. We'll show you a credit card statement. It'll goes into detail. You have to read the fine print, because it could say balance transfer fee 10% of whatever you transfer. 10%, then you're paying 0% for 12 months, but and then someone will charge you a fee on top of that. So just be careful and read, because sometimes you can get balance transfer with no balance transfer fee. If you're really paying attention, you can probably find one of those deals. But you search it out. You're getting something in the mail, someone's soliciting you, read the fine print. Don't just sign it and send it back in. Okay? Do the homework. The disadvantage, remember, it's a loan. And immediate purchasing power, yeah, the interest rate may go up. So when they offer you 12 months, same as cash, what happens if you don't pay it off in that 12 months? The interest rate, then you start getting charged interest, and guess what? They charge you all the back interest from the whole year. Yeah. Read the fine print. No, it does. So what they'll do is, if you don't pay it off in the 12 months, they'll turn around and they'll add all that interest that you didn't pay all those months. And they're going to add that back on. So that's why if you're buying furniture or anything like that, have a plan that you're going to pay that off within that time period. Okay? It's really tempting to do that 0% for 12 months and not have that extra bill. And again, it may include additional fees. So sometimes we talked about the balance transfer fees. One thing about the advantages of credit offers and things, you can easily overspend. How many times have you, I've done it. I've walked into Home Depot and I had a project, and I did my kitchen, and I went in and I was like, okay, I like that tile. Oh my gosh, I'm doing it myself. Okay, well, I'm going to get that stripping, and I'm going to get, and I just went way overboard. But they offered me 18 months, 0%. And I was like, okay, I don't have to pay anything for 18 months. If you look at the agreement, you do have to make payments every month. They'll charge you a payment every month, and it'll be, and I don't know what their payment ratio is, but if you just pay that minimum payment, guess what? In the 18 months, you're not going to have it paid off. So people are thinking, I'm going to make that. Yeah, I got a bill. I'll pay that. That's easy. I got 18 months. Well, if you don't do the math and figure it out, you'll get that. Because remember, they're in business. They want you to buy stuff, but they're in business. And it can impulse buying. We talked about that. I do that. Now, here's what we talked about, the things to look at for on a credit card. I don't know if you can see this or not. The APR. Compare that, because it could be different for different credit cards. And there's different offers for different types of cards. So do your homework. Really read the fine print. If you're signing up for something, I want to know what I'm paying. I want to know what that is. All of these fees are on top of the interest that you might pay. So there's annual fees. And then you have just the different, you have to really read that in the fine print, because you could get additional fees. If you don't pay within a certain time, they'll add stuff on. Late fees on a credit card are ridiculous. And sometimes they'll give you a courtesy, maybe once, but if you're late more than once, they're not going to be as nice the next time. And then you look at the options for advances. Sometimes people will do what's called a cash advance on their credit card. Does anybody in here know what happens when you do a cash advance on a credit card? You need to cash. What do? You know what happens? Your interest rate, they charge it as cash out. Your interest rate's like 27, 28%. So they don't tell you that. And then a lot of times there's a fee on top of that. So if you go to the bank and you're thinking, I'm going to get, okay, yeah, I need this $100. Give me a cash advance. You're going to pay an outrageous amount of interest on that. And not only that, you're going to get a little fee on top of it. And a lot of people don't know that. So it's really important to kind of do your homework and learn all those things. And sometimes, I mean, I'll even have my tellers like warn people. People will come in and say, I need to do a cash advance. I'll say, now you know that there's a different interest rate for the cash advance than there is for your just using it as a credit card. You sure you don't need to just spend it as a credit card? Some people, you just got to be smart with your money. It's your money. So, and this is just what we talk about, the score and everything. What'smyscore.org. That's another place to go. There's all different types of help online. I'm going to look at some more of these, answer some more of these questions. Finance charge to make credit. Okay, so what should I do to prepare for and when anticipating a purchase of a car or a home or renting an apartment? So what you want to prepare for is the payment. You want to make sure, and a bank will do this for you actually, take all of your debt, add all of your debt. So when we look at a loan, we look at debt to income. And I don't know if you remember what amount I said. We don't like to go over 43%. That's at our bank. I don't know if usually it's around 40%. That's going to determine. So a bank, when we're looking to lend money, we look at debt to income. That's your ability to pay it back and how many bills you have. We also look at your credit. So we use Equifax at a Truist. And then we just look at what you have outstanding. How did you pay your bills? What's your collateral? Okay? So you want to look at, so if you're using collateral, if you're not using collateral, guess what? The bank takes more of a risk. So that rate's going to be higher for unsecured. Now, so think about that. Always look at it through the bank size. If we're lending you something, if I have a car as collateral, right now our rates on car loans are crazy. They're down in the 2% range. You can go get, so you can really negotiate things if you take your time and do your homework. Okay? Don't just walk into a car dealership, and I'm not down in car dealerships, don't be mad at me. But what they do is they're in business. So they'll say, what payment can you afford? I don't know if any of you have been car shopping. That's the first question they ask me. What payment can you afford? So when they ask you that question, they're actually kind of feeling you out to see, okay, I wonder if you say I can afford $300 a month. So then they're going to be like, all right, let me go look, let me do the math, and then they'll go shoot your credit out there. And then the banks will come back and they'll say, here, I'll lend them money, and then so your credit's being shot out there all over the place. Go with a plan. If you bank with somebody, and you talk to them first before you go to the car dealership. Okay? Ask them, what kind of rates do you have? You walk in there with knowledge, because when same thing with buying a home or anything. Think about things before you purchase them, because there is all kinds of, everybody's selling stuff now, you know? So car dealers are, you know, we're going to have a whole bunch of 2020s that's been sitting on a lot in Sparta, Kentucky. So be thinking about that too. So don't get in a big hurry. I'm not a car dealer. I'm a banker. So I just tell people, do your homework. And if the car loans that I've done, the dealership haven't really been negotiating that much, because guess what? They're going to have to write all that stuff off. You know, they're all waiting for those little chips, and those are just coming in now. So, you know, the cars that are on the lot, dealerships are just they're trying to get inventory. That's why people are calling you. And I mean, I have a used car out there, and I've been called by Nissan daily. I get letters. Hey, we want your car. We want your car. So, because they don't have any stock. They don't have any stock. So when you walk on a car lot, you know, most people don't like to buy new. And they might have some of the new cars out there now because they do have some of the chips coming in. So it's just, like I said, I'm not a dealer. I don't know what's out there. I just know I've been doing loans on the bank side. And that's kind of what we've been dealing with. So good questions. So we talked about debt to income. We don't like to go over 43%. 40% is the ultimate. That's the good thing. So how do I get to my debt to income? How do I know it? Add up all your debt, and then you divide it into your income, and it'll give you a percentage. Okay? So look at that. And if it's over 43%, then you know, man, I got to start paying something down. I got to start paying something off. And then you can get that debt to income in line. So that's where a plan comes in place. That's where that budget comes into place. Because remember, we taught you how to pay off the smaller ones first, so that increases your debt to income. So you want to make sure it's more in line, so you can go get a loan. We know you can afford it. Loan, yeah, sure, sure, sure. He asked if it's possible to get more than one loan at a time, as long as you can afford it. So what we do when we look at that case, we will add the cost of that other loan that you're doing into your debt to income. So we'll add that on to your bill, and then we'll divide it in, and we'll say, yep, he can afford it. As long as your credit's good and you can afford it, we'll lend you the money. And we try to find creative ways. There's all types of things that you can do. So a lot of people are refinancing their cars because couple years ago you were paying 7 and 8%. Now you're getting it for 2%. That's money. That's smart. That's a smart way to look at things. You just sit down with somebody and say, would this be a smart thing to do? If I pay this off, I want to make sure, and I always make sure people aren't extending their loan. I want to make it beneficial for you so that you're not hurting at the end of the day, and you're not being, man, why did I do that loan? Because at the end of the day, if I don't take care of you and do the right thing, are you going to come back to me? I don't think so. So we always try to do the right thing. Yeah, we're not here to sell a product. Some people might. I'm not. I'm not that way. So, but that's where you have to control yourself. You have to take control of yourself. We talk about loan to value. So we look at that in cars and houses, anything you're going to get. We want to make sure you're getting the best possible deal. So when I say loan to value, what I mean is when I look at the loan amount and I have my car amount here, let's say it's my car is 20,000. They're charging me $20,000 for my car. My car is worth $20,000. I'm at 100% loan to value. It's break even. So you need to look at those type of things. So we can help you figure out the math. So if someone says, like for instance, a home, I can lend up to 80% loan to value. So if I take the amount of the home, the value of the home, so if someone tells me their home's worth $300,000, and I do 80% of that, so I do 80% times 300,000, and then I'll get the amount that the bank will lend you. So that's how you figure that amount. Okay, so just look at that. And all those and there is a ton of calculators online, a ton that will tell you exactly what you're getting. You take the time and take the time out and do that. Look at those calculators. Make sure it's beneficial for you. So everything that we do, it does take time, and I understand that. And it's like, oh my gosh, I have to do all this homework, but it's going to benefit all of you in the long run. That you're not going to be hurting. You're not going to be hurting yourself in the end. So all of those things you need to look. Another thing you need to look at is the fees. Okay. So when we're doing any type of loan, if you here I go, I'm picking on the car dealers again, but I'm not. It's for you to pay attention. It's for you to negotiate. Because when you go in there, at the bank we ask for a purchase contract. We ask for that purchase order, and we look at all those little underlying fees that's in there. There's a restock fee. I mean, I'm sure they have. I don't understand what that is. Ask questions about it. What is a restock fee? Why are you charging me $500 restock fee? I don't know why. What is an application fee? A lot of those things they can negotiate. You know how they all walk upstairs and they can you can negotiate those things. You just really have to watch, read what that contract says. Look at the value of your car. I'm talking about cars now. Same thing with a home. Look at the value of what it is. What are the things going on? What are the cars in the area? What are the homes in the area going for? And then you're going to look at those things, and that's what's going to determine what I'm going to spend. What can I spend on that? And then at that point, we're going to look, what can you afford? Uh-huh. Yeah. Mm-hmm. Yeah. Yeah. So the question was that she knows someone that has a home and they need appliances and things like that, and she wants to know why won't they go get a home equity loan and get those things that they need, then they're getting ready to sell their house. That's a discussion with your banker. It's just depending upon, or discussion with yourself. They might want to just, some people are funny about using their home. Your home is an asset. That's an asset that you have. So that's just like money in the bank. So if you have money, like if I have money in my savings account, I can afford those payments. And I want something. I need something. I I want to make sure that I'm doing the best. So I'll look at all the avenues. If I'm getting appliances and I know that I could pay that off every month, am I going to go get a home? I'm going to pay that off in a few months. I wouldn't go get a home equity. I would go see what deals they have at the box stores or whatever, or looking at something because you might be able to. But then you're going to look at your budget and say, I need to make sure I pay this off in 12 months because the home equity is going to be out there. Yes.
Here's a question online.
Okay.
Can you negotiate with a car loan at the dealership to pay less than stated for the price of the car?
You can. You can, and that's where sometimes going to the bank and getting a loan first, that gives you a little bit of negotiating power. Car dealers don't you typically like that because like I said, I don't want to bash anybody, because I love doing loans all day long and writing people and have people to have the car of their dreams. Um, you can negotiate. What we do at the bank is we ask for the VIN, and especially if you're getting a used car, we ask for the VIN number. And then we plug that in. Everybody can go to NADA, plug in the VIN. It'll give you the value of the car. It'll give you what the retail is. We ask the mileage too, because a bank will not go over 100,000 miles. Go, the NADA, it's a car. I mean, you just call the bank. They have I have a program. As soon as I key in the VIN number, it pulls up that car. And then if you have any accessories or anything like that that's added on, if it's low miles, that adds on a lot of value to a car. And then I can tell you, or the banker can tell you, you know what, that's a fair price. They're giving you a fair price for that car. I just don't want people to get ripped off. And you got to think that dealership's they're a business. They've got to make money. They got to pay their salespeople. So some of those fees, just like when you pay checking fee at a bank, some of those fees are added in there because they're giving you a service. So you can buy a car off a private. We'll do a loan for you to buy a car off a private dealer, private person. Someone selling their car on the side. We'll give you, as long as it's a good deal, and we have everything up front. You need to make sure that's a good deal. We don't even need a purchase agreement for that. Yes. What he asked, if it's easier to get liabilities or assets from a bank. Like, what do you mean? Like, sure will. Well, you got to look at, and what we also look at the bank, it's called a cost to cure. So when you buy that 20,000 fixer upper, you got to be able to live in it. We're not going to lend you, because guess what? If it's if people walk away from stuff before, so a bank's not going to take a huge loss. So that's where I would suggest, if you have really great credit and you want to get that little fixer upper, do an unsecured loan. You're going to get a decent rate, and and then once you get that baby fixed up, refinance it. Then you just get a first. Then it's going to have a value. It's going to be an asset to you. So that's creative. I'm not. We're talking scenarios, but I mean, if there is a special scenario, run through it with me. I'll go through it with you and let you know what's a good deal and what's not. But a lot of people do. We've got a lot of customers that are doing those fixer upper things, and they want to, you know. But when you think of the housing market right now, it's booming. So you're not going to get a little fixer upper for 20,000. I mean, I don't know where you find them unless it's really dilapidated or whatever. Another thing you do is if you're looking to purchase things like that, which we'll do this when we go to our buying a home buyer, becoming a homeowner class, look at what your local government's doing. For instance, in Covington, I know Cincinnati has it too. They have this thing where they're going to give you money to help the facade, help you with things. So look at, because cities, people are moving out. Some of the they're trying to attract young professionals and things like that. They want to be vibrant in the cities, so they're encouraging people to come in. Just look and see if there's something out there. There could be some special programs, especially with financing, where you can get some deals and get some assistance. So that's something you really need to just kind of research. Yes.
Why is it, well, I know of a situation, uh, if you have a credit card and say the bank wants to refinance, now when you got the credit card, you didn't go through like your checking account to get it.
They gave you a credit card.
Card.
Mm-hmm.
Why is it that when you get ready to refinance it, they want to send the money that they're refinancing it with through your checking account?
I guess I'm trying to understand. So the question was, if you have a,
The credit card.
okay, you have the credit card.
And they offer you a refinancing of that card to lower your interest rate.
Okay.
Now, when you got the card,
You mean a balance transfer?
well, they just said refinance.
Okay.
To give you a lower interest rate on your card. Okay.
Okay.
So they're offering you a lower interest rate. But in order to do that, they want to do that transaction, they want to, I guess, put the refinancing money through your account that you didn't have to use to get the credit card.
Yeah, I would have to look at that. I've never heard of that, because
Okay.
that's like, sounds to me like they're wanting that because I know that years ago I did this. I wanted to pay off a credit. They gave me a check to pay off this other credit card. It was considered a balance transfer. And they gave me the money to pay it off. They put it in my checking account, and I was supposed to pay that off. Another thing that people were, and I'll answer your question in just a second. Another thing that we need to talk about is, one of the questions was the number of cards. Does it hurt you to have a high number of cards with high? You know what? It depends upon how you. What we look at is the longest term. That's what gives you good credit. So I have a card that I've had for 20 years. I have the limit on that. I use it. I pay it off. I use it. I pay it off, and so that positive credit all day long, all day long. It's when you keep applying for credit cards. If you keep applying for department store cards, that hits your credit and lowers your score. And again, we look at the amount of the revolving debt. How much are you using, as to how much do you have every month? Are you just like, I mean, and it's sad because I'll see people come in all the time, and they'll be making their monthly budget, and all their budget's going to the minimum payment of credit cards. And they're never going to get ahead. Never going to get ahead. So that's just, and those are the people I want to help the most, because, I want you to get out from under. I was there. I mean, I was there. Those check cashing places and things like that. That's a loan. They are giving you a loan. So think about that before, do without something, and try to see if you can find the money someplace besides going and go getting one of those little loans. Those payday loans, that's what they call them. The government's trying to regulate them, but I will tell you, you're robbing Peter to pay Paul. And if you don't have it in the first place, you don't have it. You don't have it. And a lot of times it's just for I see that a lot around Christmas time, birthdays, things like that. It's like, we talked about this the very first class. You look at, you say, do I need it? Or do these kids, can anybody tell me what they got last Christmas from, I bet, I don't think my kids could. And I spent good money. So think about that and give experiences. Do something together as a family. You don't always need to be buying something. It doesn't always have to be in your hands. So I'm not, I'll get off my soapbox on that. I tried. And I wanted to answer your question. So liabilities are what you owe. Um, and I can send, remind me, I'll send this to you. We have what's called a personal financial statement. So when someone, and it really makes, I do this once a year, a personal financial statement, you write down your assets and your liabilities. And then you total it all up. So you assign a value to something. And then when you see that, you get to see, hey, this is what this is my these are my assets. This is what I have. This is my all of my benefits that I have of what I've accumulated. So it's not just looking at um, cars and homes, and we look at what's in your savings account. Do I have life insurance? Do I have? Am I investing? Do I have a 401k? When you do your personal financial statement, you really see all of those things. It puts a number. I mean, there's people that I'll sit down with. They have no idea what they have in their 401k. They have no idea what they have in retirement. And I mean, it's not. It's just because they're not on top of mind right now. But when you do that once a year, I always sit down at the beginning of the year and do this. I'll sit down. I'll do my personal financial statement, and I'll start the year off that way, because then I know, and I'll kind of make a goal for myself. You know what? I need to get that car paid off. Get this, and then the next year I look at it and I see how I've improved. It's just good. I'll send you a blank copy of that if people are interested in it. If not, that's fine. Um, but that really helps, gives you an idea. Even if you don't have anything, then you're going to say, hey, man, yeah, I could be putting some more money. When you see all the breakdown of what's on a personal financial statement, because it goes into detail. Jewelry. I mean, that's an asset. I mean, I could sell. I sold a Reggie Jackson rookie card. I don't think you can do that. So so there's things that are assets, and when it's broken down on there, so you really have to take your time, look at the value of what something is. Okay, and make sure I also left here at the church here. It talks about protecting yourself, um, complete client protection. Um, and these are just general things that you don't think of, but I'll tell you, I see customers every day, and they'll hand me their ID and their debit card pins on the back of their ID because they can't. Just things like that. You have to protect yourself, and that's what this is. Um, a lot of times, like right now, I have my credit frozen just because of all the fraud that's going on right now. So you call those credit card companies and you can freeze your credit if you want. So guess what? Nobody can apply for credit in your name. They have to have a code, or you have to have it. Now, is it a pain if you really want to go buy something? Yeah, it's a little inconvenient. But if you've ever been a victim of identity theft, you never want that to happen to anybody. So really just make sure that you protect yourself. And that's what really all these classes are about, is protecting yourself and making sure you're selfish. Really do your research and find out take care of yourself. Make sure that everything's okay. So yeah, it's inconvenient, but yet I know that nobody can apply for credit because it will say you can't. It will say they can't pull their credit. Yeah. It says nobody's. I'm still paying my bills, so it still reports to the credit bureau. The only time your credit is pulled is when someone's applying for something, or when someone's trying to see if your insurance company. There's all different types of companies that pull on your credit. They may ask, your insurance company may ask you to unlock it or whatever. Mine never has, uh, yeah, everything always reports to the credit bureau.
Why would an insurance company pull your credit?
That determines your rates, determines if that's one of the things that we talked about. That's how you get, when you get loans, when you go into the bank, if you have excellent credit, you're going to get the best rate, the best terms, because you have the debt to income, you have the credit, you have the capability of paying that. The bank's always looking at risk. We all look at risk. You need to look at risk. So when we look at that, we look and see, hey, are they capable of paying it back? We're going to take care of them and make sure. Yes.
Real simple question. Is your banker, or should we consider our banker our financial planner?
He said, should we consider our banker our financial planner? Everybody has a different plan. I sit down with people. We have professionals. I have partners that I deal with. I'm not an expert in investments. I have somebody that I talk to that I trust. The big thing is if you don't have somebody that you talk to or that you work with that you trust, go find somebody. There's someone out there that wants to help you. We're not in the business. We can't do our business if we're not taking care of our customers. You're just going to go to the next bank. So be selfish. Be selfish. Set up that appointment. Do an account review. Have them look at. I do that for small business. I do that for people. I'll sit down. I'll review everything, and we'll hash it out. I mean, I'll keep it real with you, and I'll say, you know what? I think this is the better. Just like I told you, I would do an unsecured, or I would do to buy appliances. If I plan on paying that off, I would go to that place and go get the 0%, as long as you can pay it off. And that's where you just be honest with yourself. Yes.
Is it really a big difference if like banks or credit unions are talking both on?
Good question. Good question. So he asked is it a big difference between banks and credit unions? So a credit union and a bank, there is a difference. We're FDIC, Federal Deposit Insurance, insured. So your money's insured. Credit union's insured as well. So there's just different standards. Some people like the convenience of having a bank where they can go to. You just have to make your decision by yourself. Sometimes we can negotiate things. It just depends on what you're looking for. There's people that go to credit unions for different things because sometimes at a credit union it's a little bit easier to get approved on something where your credit might not be on top. So that's where you just you look at that and you see what's the best for me. You know, either way, someone's going to work with you and figure out what's the best avenue, what's the best way for you to get what you need and what you want.
So it wouldn't affect you to have multiple or
You,
the bank and the credit union.
he said, so it wouldn't affect you to have multiple accounts at different banks and credit unions. No. Make sure you maintain your account. Make sure you are not, because when you get a lot of overdrafts and things like that, that gives you some, that alerts banks. Banks have a system called check systems. So do grocery stores and everything. If you've ever been declined, if anybody's ever been declined at a grocery store, if they've written a check, they all report into this same thing. And it'll say, hey, don't accept a check from Sally Smith. So that's how we know that. So when someone comes in and opens an account, we pull from check systems to look and see if they're a fraud person or if they've had charged off accounts. It'll tell us that. And then there may be times where we can't open accounts for them. We do have, and this is a little bit different. We do have second chance checking. We have ways. Sometimes it's just they were just done with their money. They spent money they didn't have. So we have types of accounts. I'm sure every bank does. I don't know. We have accounts where you just use cards. We have kind of like a pay card, but you can get your direct deposit. You can get online banking. You can get bill pay, but you can still go see a teller at a bank and talk to people and have a relationship. So it just depends upon your personal needs, and that's what it's all about. I mean, at the end of the day, I have different banking needs than maybe possibly you do. And that's where you need to really have a relationship with your banker. Know your banker. When you go in there and say, I don't know if people do this. I know they come into my bank and they're very friendly with the teller. We know, they know. Hey, Mr. Smith just came in and he cashes his check every week. We know what you do. We see it. Yeah, and we see how you use your money. We can look in your account. We see your transactions. We see what you do. So utilize that. Smart ATMs. So I'm sorry, I'm not. Yes. Yep. Yep. You can deposit cash, and it's. I guess it's called a smart. I'm sorry, I'm not. Yeah, but you can deposit cash, and it's there immediately. It's there right now. Cash is king. It's always going to be there. It's always going to be there. Let me make sure I answered everybody's questions on everything. Do you think I did, Gail? I hope I did. Does anybody else have any other questions on anything? Who uses credit reports? How to improve my credit score is what we talked about. I think we've just paying your stuff on time. Don't be late. This one was the best way to control my debt. I mean, we talked about that, the budgeting through a crisis, all of those things. There is all types of budgeting tools that you can use. We have a book. I know we left some books here. Go through that book. It kind of goes through. I mean, it's a good book. I mean, I think I've answered. Does anybody else have any other questions? Yes, sir.
With this class, these series of classes, can someone that has come to all these classes and they want to establish a relationship with your bank,
Hmm.
would that be looked on favorably? I went through that class at Grace Christian Fellowship.
So his question was, I went through the series of classes. Will that be looked on favorably with our bank? I mean, I'm a relationship banker. I and that's where I talked about. You need to find a banker that's interested in a relationship with you. They should know. You should meet with your banker. Anytime something's news comes up, we're the last people to know when someone gets a new driver's license, moves. Sometimes I haven't got my debit card. It's like, well, is your address blah 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 blah? No, I moved last year. Nobody notifies us. So you have to literally sign something at the bank to change. At least at our bank, you do, because we need to make sure someone didn't change your address for you. So we're always going to we verify those things. All those things are done. We verify the customers that come into the bank. So we do. We value relationships. I do these classes out of my passion. It's my passion, and I feel like if I can help one person get something at the end of the day that they've always wanted or that they need, I it makes me sleep good at night. You're welcome. Thank you, everyone.
So there are any other questions?
Oh,
Any other questions? Wasn't this great? Well, and I'll start off. You know how we end each of our classes. I'll start it off. One thing that I learned today and that has really been impressed upon me is that it is important to have a relationship with your banker. And so the question is, do you know anybody at the bank that you go to, and that therefore begin to develop a relationship so that they know who you are, so that you have an advocate. And so real quick before we dismiss, let's go around and popcorn. Just share one quick thing that you got out of today, something that struck you, something that you learned, or something that you understand better. Just real quick, and I'll start pointing if you don't just jump up. Go ahead, Joseph. Uh huh. Yes. Yes, and he said that you can freeze your credit. I didn't know that either.
yeah.
So that's excellent. What about you, Sister? You learned about credit scores. Uh huh. More about it. Right. Understanding more about credit scores. Very, understanding your money and loans. Excellent.
And you've been calling that number on that paper on your credit score to be mailed to you.
Yes, that you can have your credit score mailed to you, and that's excellent.
Is your credit report.
Your credit
Your
report.
credit report. You have they'll make you pay for your score,
Okay.
but that you just want to know what's on your report.
Yeah.
Very good.
One other Credit Karma. A lot of people they do those credit score things. Credit Karma and those things. Those are just they don't pull your credit. It's a general. They give you general information. It's not detailed information like Equifax, Experian, and TransUnion. So it'll give you an idea. Even if you log in at your bank, I think we talked about this the very first class. We give you your credit score at BB&T. When you log into your bank online, it'll ask you, do you want us to give you your credit score? It'll tell you if you're good, whatever. So it gives us a little idea, but till we delve in, we don't know.
Very good. Pastor, did you have some closing words?
Yes, I do.
Okay, please come forward. Let's thank Rose again. Give her a big round of applause.
So, well, praise the Lord. Now, more than just throwing stuff at you, the real question becomes this: what can I do with this information? Another aspect of that question is, what are you willing to do? What do you want to do? So, I think everyone that's here, that joined us online, take a moment and dream. One of the things Sister Rose identified for us is that you can make some things happen. We can absolutely make some things happen. It doesn't matter whether you're young or whether you're old, whether you're black, whether you're white. There's a way to make some things happen. Number two, don't be embarrassed. I think that's what I heard from you. You can come in and talk to your banker. They won't spread your information to the world, but your banker is prepared to be upfront with you and say, here's where you are. Here's what I think you can afford. Here's some things I think you can do to improve your situation. See, my people are destroyed for the lack of knowledge. Now, what God is doing is giving us some knowledge so that we can do some things. Okay, so I want you to go, when you leave here, begin to pray, begin to think. What has God put on your mind to do? And you just didn't know how to do it. Well, God is laying some things in front of you right now so you can figure out how to advance yourself and advance the kingdom. Thank you for joining us. Just a couple quick announcements. We have, two more classes with Sister Rose. Okay. And the name of the bank, I know you're in the middle of a merger. Tell me the name of the bank again. Truist. Truist. Okay, now I'm going to tell you, I don't mean any disrespect against any other bank, but Truist is the one that cared enough to show up to begin to teach along these lines. I'm here to tell you that this is going beyond just the people you see here, because they're talking about it. And people online are talking about it. So please remember, and I'm not being paid to say this, okay? We deal with relationships. Please remember Truist. Secondly, on the last Tuesday of this month, we have Elder Williams planning to come in. She's a certified insurance person, whatever they are, to also talk about insurance. There's some things we need to know. All of us know someone or have experienced someone passing on and then the family not having the money to bury them. Oh, come on. Or the house being flooded or burned down and you not having the right level of insurance to cover that. About 2 years ago, we had a tree limb fall and crush our truck and our car at the same time. Okay. Thank God we had the kind of insurance that let us address it. So I'm not catching a bus. I'm in a truck. Praise the Lord. So these are things we're trying to give you tools so you can build your own house. Please remember, God has more for you so you can do more for yourself. Also, on next Wednesday, not tomorrow, but the following Wednesday, with Bishop Ernest Davis coming to teach a special Bible class for us. You're more than willing to join us. Join us on Sunday morning. You know, we call it Sunday school, but you know what? It's more of a service along this line. You can ask questions and you can get some answers. When you come in, I ask you just to be hungry, hungry for a move of the Lord. Hallelujah. And that movement continues on throughout the rest of the service on that day. Well, that being said, God bless you. Heaven smile upon you. If we don't see you tomorrow or on Sunday, we'll see you next Tuesday at this same time right here. And what's the topic for next Tuesday? Oh, come on. Growing your business. Growing your business. Brother Joe, growing your business. And you like to trade vehicles, buy vehicles, do those kind of things. Growing your business, whether you're talking about a food truck or a food tent, growing your business, whether you're cooking out of your home kitchen and you want to move to a dedicated brick and mortar, growing your business. Hallelujah. So please join us. Join us next Tuesday with Truist Bank, who will give us some ins and outs and some things to consider about growing your business. God bless you. Heaven smile upon you is our prayer. Thank you so much.